Welcome to Growth Investing Mastery. Today's video is called The Disciplined Investor, and it may seem harder than ever to maintain discipline when the markets have so much volatility. As a reminder, this is not recommendations to buy any stocks. The material from this video is largely adapted from The Disciplined Trader by Mark Douglas. I've changed things to be more relevant to investors, but largely most of the advice in that book is relevant to investors as well. And Mark Douglas started writing in 1982, but the book was only published in 1990. And it's kind of crazy when you go back and read in 1990 saying how much advancements there have been in data and computers and recommendation services, as if 1990 was extremely futuristic. So we've also tried to adapt the material here to be more relevant to 2025. Mark Douglas details that he was an account executive at Merrill Lynch Commodities in Chicago, a highly prestigious position. He was constantly trading under fear due to his own enormous financial pressure, and he lost everything through a forced awareness. He lost his house, his apartment, his Porsche, and he had to declare bankruptcy. And Mark says that he was shocked to find that out of 38 coworkers he talked to, only one had personal experience trading their own account. Nobody was making consistent money for their clients, and everyone had a big trade mentality. You'll often see big trade mentality on places like Wall Street Bets today, where someone wants to YOLO or all in for a put or a call, but that's not the approach we want to take here. Mark Douglas had his own forced awareness when he filed for bankruptcy, and suddenly filing for bankruptcy made all the fear and negative emotions dissipate. Mark Douglas does recommend avoiding a forced awareness if you can, because going bankrupt can be extremely painful and hard to recover from. Remarkably, Mark Douglas kept his job even though he filed for bankruptcy. And he's in a lot of YouTube videos from the 1990s describing this, where he thought he would be ridiculed by his coworkers because he was considered a very successful and respected guy, but everybody at his workplace kept treating him the same. And he learned how to accept losses without any negative consequences of guilt, anger, shame, or self-punishment. After Mark's forced awareness, he no longer had fear. And he says, the more I followed my rules, the more I trusted myself. With the fear gone, just 3 months after declaring bankruptcy, Mark was able to start making money for his clients consistently. The secret to this approach is learning a new thinking methodology, he says. One key concept to review is the unlimited nature of markets. Markets allow for complete freedom of expression. There is no beginning, middle, or end. And markets are like a river constantly flowing, as Mark Douglas explained. And I added here that all investors see the same river or get dealt the same hand. Imagine in poker, people get dealt different hands. For example, someone gets dealt pocket aces and somebody else gets dealt pocket kings. They see different hands. But in the stock market, we all see the same stocks with the same price quotes. The book says, in an unstructured and unlimited environment, it is essential that you establish rules to guide your behavior. And the typical trader or investor will do anything to avoid creating rules so that they don't have to take responsibility. Our brokerage allows us to make up our own rules for how we invest, and no one forces us in or out of the market. The market allows you to be a passive loser, and getting in is easier than getting out. Sometimes you'll talk with a fellow investor who will say something like, I don't even know why I'm in this stock. And if you respond, well, then why don't you sell the company? They might come up with some reasons they don't want to sell, even though they aren't enthusiastic. Mark gives his definition of what an expert is. It's someone who builds a simple trading system and gains confidence by not overwhelming yourself with the infinite possibilities. And for myself, this was a huge insight to realize that I should simplify my system and not add complexity when possible. Creating structure is an excellent technique for addressing discipline issues. Getting organized and creating structure is the obvious solution, as detailed in The Disciplined Trader. If you can't define your own behavior, you can't learn how to repeat your wins or prevent your losses. And the book says the market moves in ways that will constantly tempt you into believing you don't need to follow the rules this time. With growth stocks doing poorly in the past month, it's tempting to believe that we should create some alternative strategy or completely veer off course and change our approach. Mark Douglas says there's two key components to creating structure. The first is instituting a completely disciplined investing approach, and the second is learning how to release yourself from negative emotional energy stored from past trading experiences. A disciplined approach will build self-trust, and that'll help us function effectively. Achieving objectivity requires you to allow for anything to happen. Let's talk about responsibility in investing. Many investors do great market analysis, but then they take other people's opinions over their own. And just sticking to their own analysis would have provided better results. The same trader or investor will focus blame outside of oneself for the poor results. And sometimes you'll see this talking to other investors where they might have said, I read an article on Seeking Alpha, for example, and then I decided to sell the company. And Seeking Alpha is just a site where anybody can post an opinion. Obviously, somebody can create a profile and a good track record. But one of the issues may be the investor didn't do their own original research with reading conference calls and earnings reports and stuff like this. So they end up making a mistake of just trusting somebody else's opinion over their own. The way we can build strong conviction in a company is by doing our own research. And that way, if we read somebody else's opinion, we can critique that opinion or see if it makes sense. And the disciplined trader says in the book, the responsibility for what you perceive and for your resulting behavior resides only in you. And Mark Douglas says that a trader's own behavior may be mysterious, leading to the market seeming mysterious as well. This will create a constant source of fear, anxiety, and confusion. Superstition is bred out of avoiding responsibility. And sometimes you'll hear investors say something like, I buy and then I watch it go down. And it might be a joke, but they're really promoting some sense of superstition here. Risking money on a gambling event with a random outcome requires no responsibility. For example, let's say the Fed was going to make an announcement on interest rates, and you're debating whether you're going to buy a put or a call on the SPY because you think the Fed choice may move one way or another. And you really have no way to estimate the probability properly. Maybe it's 50-50, maybe it's 75-25, but it's hard to really quantify what your edge can be there. And when you make a bet like that, you're mostly just gambling, and you don't have to take responsibility after. You can just say, I got unlucky, or it didn't go my way. The solution to these issues is to start taking responsibility, which creates confidence. For example, that could mean reading earnings reports more diligently and creating a better process. This will also dissipate negative emotions. Let's look at the lessons that Mark Douglas teaches us about fear. And if you listen to my last video on investor psychology, you know that Jared Tendler took a very scientific approach that fear shuts down your higher brain reasoning. And in The Disciplined Trader, we learn that fear is always a result of a perceived threatening environment. There's also two sides of fear. There's fear of loss and fear of missing out. Learning to release yourself from fear will separate yourself from the crowd of other investors. A quote from the book is, in the market, the fear of losing one's fortune is every bit as intense as the fear of losing one's life from an attack by a wild animal. In the other video on investor psychology, I'd give an example of opening your front door and seeing a grizzly bear there. And I think it's kind of funny. I'm pretty sure I took this from Mark Douglas without really realizing that I had done that. The absence of fear is critical to continuing to learn and grow. Fear has a profoundly limiting effect on the information we can process, and we need to learn how to invest without fear and trust ourselves to act in our best interest. Positive cycles are expansive for us as an investor, and negative cycles are equally degenerative. The net result of painful experiences just perpetuates the cycle of fear. We want to build positive cycles for solving fear. And the book says positive energy is expansive. It promotes mental growth or learning by creating a sense of self-confidence, which in turn results in an openness to explore and discover the unknown. Let's review a trap that many investors fall into, and that's believing that investing is easy. It's a psychological trap that entices almost all investors, and many investors never make it beyond the initial levels of development. No physical effort is required to invest, and it's primarily mental. Results in the stock market can happen very fast, and it often feels very easy. The first winning trades teach us how little work was required to get the results, and we block out perception to the contrary, that investing could be hard. Mark Douglas says trading is probably one of the hardest endeavors one could choose to undertake. And I'll add that investing well is similar. If we want to get really strong results with investing, it's going to be challenging to learn all the skills necessary to do that. Now let's talk about some strategies and solutions for improving our discipline. We can focus on the development of skills and process over focusing on money, and our willingness to change and learn will be beneficial. The book says, I have found writing is one of the most powerful tools available to focus my thinking and effect some changes I desire. Writing directs our attentions, and it allows us to focus our thoughts in a consistent fashion with what we want to create. We need to release ourselves from the need to be right, and we want to develop a simple system and stay within our own rules or guardrails. The idea of a simple system was the biggest epiphany from this book for myself. Previously, I had looked to add complexity or dabble in different strategies, and I realized I needed to find my edge and build a very simple system which has a clear edge in the market. We need to focus on self-improvement as it relates to investing, and the less we block, the more we learn. We should remember that trading or investing is completely mental, and there's no physical effort required. Lastly, I'd like to introduce a phrase which describes my ideal mindset, and that is Zen mind, beginner mind. In the beginner's mind, there's a world of possibilities, and when we start thinking of ourselves as an expert, we tend to block out other information because we know it all. The more balanced we are, and the more we bring a beginner mindset to our process, the better results we will get. Let's summarize what the key concepts are to becoming a disciplined investor. First, we must realize markets are unlimited, and fear will have a debilitating effect, making it impossible for us to learn. We need to build a simple system and one that has an edge over the markets. As we create structure and book wins, it will increase our confidence in investing. We want to strive to continually learn and improve, and we want to work on building discipline. And when markets are turbulent, like right now, it can be hard to maintain discipline. But maintaining it right now will build a lot of confidence, and we can also take responsibility for all our results. We should use writing as a tool to improve our process and build confidence. And as Mark Douglas concludes, the rewards can be astronomical. And let me know what you thought of this video. This was the second video on psychology, and I mentioned there's also a third book called Trading in the Zone by Mark Douglas, which has other key concepts. I'm planning to do a third video on that, as I feel these videos on psychology are especially important when the market's this turbulent. Thanks.